So welcome to the Forex Weekly webinar today. I'm Mike Swanson, founder of TradeWest Forex. Today I've got something brand new. I've had a lot of traders asking for more entry strategies. I hold a poll at the end of all these webinars, and that's been the recent request, is more entry trading strategies. So today I'm going to teach you something I call the New York Fade. It's a high probability Forex strategy, and I think you're really going to love it. So let's just jump right in. What is the New York Fade and how does it work? Well, it's all about catching the pullback that happens at the end of the day. You probably see at the end of every day there's a little bit of volatility, but there is a strategy you can use to capitalize on that, and that's what I'm going to be sharing with you today. So the New York session closes at 4 p.m. and this is actually when traders are looking to unwind their positions for the day. What that means is they're closing their positions they've held for the session, and this is for all those that day trade that don't want to hold positions overnight. Okay, so the New York session opens up at 8 a.m. Eastern, closes at 4 p.m. Eastern. Okay, so the idea is to trade the opposite direction that the market moved for that session within those 8 hours. So I'm going to show you some examples of this on the charts, but that's the basic idea. It's a really simple strategy, but it's very effective and has a high probability. And it's a strategy that makes sense because at the end of the day, when traders unwind positions, that causes liquidity to be taken out of the market, which will move it very easily because that's a low liquidity time of the day, right at the end of the day. So let's go ahead and take a look at a few setups. Let's bring up our charts here, and I'll show you exactly how this works. Here we have the euro dollar. I've just put this on a 1-hour chart to make it easy to spot the beginning of the session and the end. So if you have a broker that's based on GMT time, the starting time is going to be 12 GMT. Okay, that will be 8 a.m. Eastern, and the session will close at 20 GMT, which is 4 p.m. Eastern, right? Okay, so once you have those set up, those lines on your chart, I just draw these for a nice visual of where the session's at. You will then say, okay, which direction did the market move in that session? And you'll know that whichever direction it went, there's a high probability of it moving the opposite direction. That's why we call this the New York Fade. We're going to fade the move for the day, knowing that if the market was moving short, like it was in this case, right, we had the market moving down, we know there's a good chance that these guys that were short are going to close their positions because they don't want to hold overnight positions. These day traders want out. So right here towards the end of the day, that last hour of the day, you would look to go long right there. You could get long on the close of that last hour, and then the very last hour of the day, it comes up, and you could close your position there or continue to ride it through the Asian session that sometimes will pick up the move and continue it. Okay, so that is the New York Fade. Very simple strategy, easy to use. Okay, so let's look at a couple more examples. It doesn't just work on the euro dollar. You pretty much want to stick to the pairs that are dollar-based or the popular pairs that are traded in the New York session. So let's look at the pound dollar. Okay, so here's the pound dollar, same exact thing. We look at which direction did the market move for the day. Well, you had the market moving up, right? You started right here, open of the session. The market moved up in this case, market came back down, and at the last hour of the day, you'll see positions were being unwinded, and the market moved down. It wasn't a huge move on this one, only about 8 pips. The idea is no strategy is going to be 100%, but this will give you that edge that you need, even if you're winning 70 or 80% of the time. If you use good risk management, you can do really well with really any strategy. Okay, so we could go back and look at this every day of the week. The only day you can't trade this, of course, would be on Friday because there is no, I mean, you could try to do it. You just got to be careful. There's not a lot of time, I guess, before the market closes and you're locked into the weekend. So if you try it on Fridays, you just need to be, you need to be sure to get out before the market closes and be sure that you know what time your broker platform closes. So that is the basic idea of the strategy. I could probably go into more examples in the Q&A, but why is the New York fade a great, so great for day trading? The nice thing about it is it's predictable and it's very easy to set up, like I've just showed you. It's really easy. You know exactly what to look for, when to look for it. Okay, there's no waiting for a breakout or for a certain indicator to line up just right. It's just it's straightforward. And the good thing about it is it's something that has a reason of why it should work. A lot of people, you wouldn't believe, but people will trade strategies that there's no reason why it should work. They're just lining up 10 different indicators and think because all of those are pointing in the same direction that means the market should follow that direction. Okay, with what I showed you today, this is something that is based on liquidity in the market being taken away at the end of the day, and naturally the market's going to move in that direction. Okay, so you can get more free training on the blog. This is where I post all the replays, tradewestforex.com/blog, and you can also download our free tool. We've been working hard on adding all kinds of new things to this. It's the Informer tool, tradewestforex.com/informer. And then what we're going to do for the remaining of the session today is we're going to go into the Q&A. We'll go into more examples. And I hope you really enjoyed this lesson today. I know it's something that, just if you go in and add it to your, your toolbox of, your trading strategies for the day, just make this part of your routine. At the end of the day, jump in and try it out. And I think you can do really well with it if you put the effort in.
Trading at its best.